Okay, what's going on in the world of Australia, guys? Australia is another nail in the coffin in this global housing economic.
Go down.
Okay, sweetheart, don't bish, don't bish. Guys, Australia is so important. New Zealand is so important. You guys have no idea how important these countries are when it comes to solving or rectifying or fixing this global economy. And it's every English-speaking country. I have a friend, boots on the ground, Marcus, down in Jamaica. And he's been watching my channel for about 4 years now. And surprisingly enough, I think I actually met him when I was in Jamaica before he started watching my channel, like 10 years ago. I think I actually know who this man is. I see him sometimes on YouTube too. And talking about the Jamaican crisis, where the Jamaicans basically sold their entire country out. They sold out their airport. They don't even own their airport. They don't even own any other highways in Jamaica. They don't even own anything. The Jamaicans don't own anything in their own country. And they sold out to the highest bidders. And look what's happened to Jamaica is phenomenal. I watched some of this guy's work before it gets taken down, of course. And it's depressing. And now auto insurance companies now are foreign owned in Jamaica. Some auto insurance companies and electric companies are foreign owned. So the Jamaican proper has nothing. It's so bad in Australia that police officers, lawyers, doctors, anyone that's a public servant that works for the government that's needed in those positions to help keep the infrastructure going so people don't die on the streets and don't die in hospital beds because there's no doctor to see them. Those people can't afford to live in Sydney. So being a doctor maybe isn't the greatest money-making way. I think maybe selling homes or something is a good way to make money, you know what I mean? But oh, guys, the comments are going nuts right now. I need people from Australia. I need some of them to call me. A lot of them email me, guys. You're going to have to start email me your phone number with country code and state the whole code with the 011 or whatever it is. You got to give me your full phone number. We have to start calling people in Australia and New Zealand to find out what's going on. Okay, very high chance interest rates to rise next month. Okay, now let me explain to you why I'm reading an article from a month ago. There's a reason why. It ties into the next article, okay? Today, the Reserve Bank decided to leave interest unchanged and a record low of 1.5%. It's historical low, actually. Very few, if any, economists were expecting the bank to do anything different. The Reserve Bank is between a rock and a hard place, AMP Capital's chief economist Shane Oliver said. He's right. If the Reserve Bank lowered interest rates, most believe that the banks would pass on that to borrowers. Of course. It would also give banks less firepower should real crisis come along. So they're not buffering for this, okay? And if Reserve Bank raised rates to help prepare borrowers for the future, steeper rate rises, as some have suggested recently, it risks stalling economic growth. That's because despite the robust infrastructure spending, stronger businesses, investments, and particularly healthy export sector, it's the consumers that causing the anxiety among policymakers. So if you bought a home and interest rates go up and your payment goes up when you have to renew your mortgage, let's say by $200 a month, a lot of people will be underwater. Okay, so this is last month's article from Australia. Now, let me get to my point. Before I go there, if you're just tuning in, let's get back to this. This article I read. Now, the reality is the U.S. Federal Reserve may do greater harm to the economy by waiting longer to raise interest rates. So, guys, I'm bringing this up like over and over again because if Australia does not raise interest rates sooner than later, it's going to damage and cripple its economy even more. The U.S. is going to keep raising rates. It's buffering a crash. It's preparing for a crash. Mind you, the average median household price in the United States benchmark across the board is $225, maybe $260. High benchmark across the board. So it's still within affordability range for most Americans, right? So now let's tie into the article here. Very high chance of interest rates next month from July 3rd. Boom. Yesterday's article. Moody's falling Australian dollar could trigger RBA rate hike. Why? They're not raising rates. Dollar deflates. Becomes less attractive. It becomes a problem. They're not hedging. They're not preparing for a crash. Australia is in a huge disaster zone right now because they're not hedging against the crash. And if you want to believe delusional Mike, you can. But if you want to believe the respectful, tie-wearing real estate agents and tie-wearing, media hosts and news anchors that look so perfect and properly trimmed, probably have 6-7 credit cards going on, you know what I'm saying? This needs to be done. So Dale Cunningham saying every time the U.S. raises rates and Australia doesn't, our dollar weakens, so the cost of living increases. Can't win either way. And yeah, this is what's happening. This is inflation hits, and we're gonna get back to this. I'm gonna bring this up every couple of times so I do the show. There's hyperinflation in Zimbabwe. There's the $100 trillion bill. Ooh, is that 500 trillion? Oh no, that's $50 billion. Yeah, that's $50 billion. That's from 2008. That's nice, you know? And what's this one? $200 million. That's a lot of money, man. About Moody's falling Australian dollar could trigger RBA rate hike. Debt-laden Australian households are at risk with higher interest rates, with the Reserve Bank under pressure to lift the cash rate sooner than market expectation. Ratings agency Moody's has warned. Moody's said ongoing falls in the value of the Australian dollar against the US dollar could force the RBA to lift the cash rate, the rate of banks charge for each other for overnight borrowing. This is despite the market consensus that the rate would likely be on hold for a record low of 1.5% for some time in the foreseeable future. Do you understand? You can't do that. Historically, record low interest rates for too long into the foreseeable future will create... What are they hedging? Is Australia buying gold, guys? Is Australia buying tons of gold that I do not know about? Are they buying 1,000 tons of gold? 6,000 tons of gold that we don't know about? Metric tons? Is Australia creating 800,000 private sector jobs that we don't know about? Because I'm in Canada. Maybe they are creating 800,000 private sector jobs to tax the middle class, so the middle class could spend. This is a nightmare. Okay. Cash rate increases could lenders lifting borrowers' home loans interest rates to make debt less affordable in highly leveraged households. Moody's report released this week said Australian households are vulnerable to tightening of monetary policy that is more rapid than we are currently expect. The report authors Alistair Lim and Jean Fang said, Mr. Lim and Mr. Fang said that the local currency had fallen more than 5 points against the US dollar since the start of 2018, and warned sustained currency depreciation could lead Australia losing its current AAA credit rating. I don't care what it is, AAA plus. Other countries that are paying down their debt and have normal interest rates have B and C and D credit ratings, but you know what? People aren't starving right now like they are in Australia. Why aren't they starving so much in Australia? Because they're living off their equity. And they're buying off their equity. Now that's come to an end. Australia's household debt as a share of disposable income is among the highest levels for AAA negative rated countries, have risen from 180% 3 years ago to 200% in March this year, the report said. In a scenario of faster interest rates increasing, household debt affordability would weaken further and more quickly, cooling consumption and GDP growth. If depreciating Australian dollar curbed investors' appetite for local assets, it would also rise external vulnerability risks. Thank you! Moody's provisional forecast of the Big Four banks to follow the string of other lenders, including Marquet AMP, Bank of Queensland, in lifting home loan interest rates to counter the increasing wholesale funding costs. So far, the big four have held off from lifting home loan rates, and instead Commonwealth Bank cut interest rates by 0.10 percentage points across the number of its fixed home loan products on Monday in an unexpected move. So now, this bank right here, Commonwealth Bank, is taking a loss on its lending to try and attract more customers. They're taking a loss on lending. That's a bad move. That's a really bad move. But hey, you know what? What can you tell these people, right? There is no doubt that the leverage of Australian households to household debt is one of the Reserve Bank's major concerns, and it wants to see a buffer from wage inflation before home loan rates start rising broadly. Wage inflation? He said that 1% increase would do a $220 a month to $400,000 month mortgage repayment. Recent borrowers have not had time to build up enough margin in spite of current level low rates.